Hello, my weary Ethereum friends. Welcome back for more Ethereum technical analysis. Let's just dive straight into the charts and see if we can broaden our picture on things a little bit. So actually, I started the intro there on the 24-hour chart. Oh no, the 4-hour chart. That's breaking my convention. Don't normally do that. You can see above me the price is $188 currently, and this is of course the Ethereum USD perpetual futures contract, 24-hour now since I changed it from the intro. And let's just have a wee quick look and see what's been going on in general, shall we? In fact, before we get started, let me just take away that trend line. Is kind of unnecessary on the Fibonacci things to have those trend lines, those in my opinion, unless you've sort of positioned it up somewhere for yourself and it actually provides you with utility. Of course, who am I to judge? Now, what's happened really since yesterday is we've met our downside target. We were kind of looking towards this area and saying, hey, you know, let's be realistic about things. We could easily be going down to visit this 200 simple, the bottom of this channel yet again, and yeah, just check in with our pal, the 200 simple moving average, and see how it's getting on. It's just what we've ultimately done. In fact, not the 200 simple, this is the 233 simple. Let me just change this here up a wee bit. Can I not keep on getting the horizontal line? I'll just change this here to say 200 simple again, just so you can see where it actually would be. Yeah, is that changed? Yeah, so we've actually come right down and sort of said hello to our pal there. I'll just put it back to 233 since that's what I've been using for the last couple of days just for the crack. But really, essentially, we came down and visited our pal at 200 simple. The point kind of stands, and we had our horizontal line here at 185. Now, I'm not a financial advisor. None of what I do here is financial advice. Don't ever take financial advice from anybody off the internet, or that that you aren't specifically paying and isn't insured and all that sort of jazz. Blah blah blah. But here we are, and what I would have been doing in this area, of course, was longing it from 185, hoping to get back up here to test the 193 level, just in terms of a quick pop at the sort of playing the horizontals off of each other. And if you take a little quick measurement there, you can see that you can get a good solid 5% move really in and around those sorts of prices there if that were to have played out. Now, if we go down to the 4-hour chart, we can get a closer eye at this, and we can see that so far that's not the case. So really, what I'm talking about is the near future. What am I looking for next in terms of price action? Well, I'd like to see it come back up here and challenge this 194. If we could get opens and closes again up here above the 194, then maybe we could start thinking more positively about if we found some sort of foothold of support and we might get buyers coming back into the market. Now, will we necessarily do that? I don't know. I just couldn't tell you, and but there's always hope, right? And if the prices, on the other hand, were to do the opposite and close below, opens and closes below 185, then my eyes are surely set on that 177 sort of price point there. And then after that, we'll have to start looking to the downside. Now, what can you notice about the price action over the last few weeks is that we've actually managed to come through every single one of these horizontal lines that we had printed out here for ourselves onto the charts over the last few weeks, which means I will have to start looking towards further downside if that's the case in terms of where the prices would go. But we already have two lines sort of on here from our Fibonacci retracements, which give us a little bit of an indication of where the prices could go, I suppose, should they actually slink on down underneath here. But first off, the last thing I'd do before adding any more of that on just yet and getting ahead of myself is I'm going to look towards the 175 price level, where the 236 Fibonacci retracement line comes in at on that particular retracement that we've got there from the highs in June down to the lows in December, and see if that can actually manage to offer up any support along with that sort of horizontal line. The sort of the general confluence of having had that as resistance in the past and hopefully as support in the future. But we'll have to wait and see how things all pan out. Overall, Ethereum's been looking rather shoddy of late. In terms of the oscillators, excuse me, if I could get the word out, down below, you can see if this low here to this low here, across here, down here, the stochastics, it's higher. As you can see there's an upward trend on the RSI, as you can see, upward trend there as well. On the MACD, not so much, but we could say that we've got 2 out of 3 sort of cases again of bullish divergence here, classic bullish divergence. While we look at as we look at the chart now, what else is there to be said? Well, if we look at the tops during the downtrend and you compare the tops to each other across these oscillators, then as is so often the case, you can see that we've got hidden hidden bearish divergence, as in a continuation, as in the divergence is between the oscillators and the price action, but but continuation is the key there for the hidden stuff. So if we're looking here between these tops, you can see that this is higher and this is higher. So 2 out of 3 times we have, in fact, what we're looking at, it doesn't look to me like the MACD would be higher. Is it this top here? So it's this top here on the MACD. This one, is it this one? No, this one here. Maybe I seem to be, I'm tired today here, obviously, but let's just doing it from this point of view. Looking here between this top, and you can see that over here, potentially we've got some sort of I'd say at least class B, whatever, of the old hidden bearish divergence. So, there's a lot of pressure to the downside. The confidence in the market is pretty crap. Some of that could have stuff to do with coronavirus, and there's a good link to a good video that I highly recommend watching here in the description just below, and I'll put it on the end screen as well if you want to just get a clickable link for that. I highly recommend watching, which explains a lot about whether or not sort of crypto Bitcoin could become a safe haven asset in the face of things like the coronavirus. So I definitely recommend watching that. But what have we got looking for us here in terms of divergences and everything else is not particularly great. Overall, we could still just be sitting in, if we go up to the higher time frame, sorry, and click auto, hopefully this will sort it out for us. Right, forever scrolling, my life scrolling. We could still be sitting in a higher low on the weekly time frame, and that would always be the case all the way down as far as $135. So in terms of the weekly chart and whether or not we start having to think, oh, very, very much the macro trend is to the downside, no, it's not yet. The macro trend is still to the upside, and even on the 24-hour chart, whilst we've had all these lows in, you can kind of see that really it's in this crucial area where we've got the yellow box, and the majority of the trading activities happened in and around all this area here. The yellow line, sorry, not box, magnolia line here at 236, that's kind of our crucial Alamo. So that'll do it for today, ladies and gentlemen. Thanks very much for tuning in. I do have the DMI down below here. I forgot to mention it. What have we got? This is the 24-hour chart. Look here, you can see that the red line is here above the 20. The red line's the ADX, and the negative DI here is crossed above it and is moving towards the upside here as the trend, sort of the general strength of the trend towards the downside. You can see the blue one, which is the positive one, is diverging away from the orange one. The general trend towards the downside is actually strengthening through all of this period here, and as you can see, really looking at when you look at the trends down the way, really overall that is the case. It's only the very, very tippity tip end here in the stochastics and the MACD which are saying anything contrary to that, and that's kind of just the way that it is really. You can see as well over the last 4 hours on the 4-hour chart here, just how the DMI again is starting to move towards the upside. The strength of the trend is it's very much there towards the downside. So I will be keeping an eye out for those targets that I pointed out already, such as the 177 area, and I suppose if we break below there and things are to move quite quickly, the next sort of target to have in mind, by the way, is at 160. See you in the next video. Oh, and like, subscribe, and all that sort of jazz. And there's the video for TradeSpotting's coronavirus one. Excellent watch.